Hi, everybody. My name is Alana Berkowitz.
Hi, everyone. I'm Shivani Siroya.
So thanks for joining us. I've had the pleasure of getting to know Shivani and getting to know the Tala business and watching it grow and being helpful when I can over the last couple of years. So I'm really excited to be able to get to do this. Just to start, as someone who was a former United Nations employee who had experience, doing qualitative interviews with thousands of people across different markets who were, where you were really trying to map their financial lives. I'd love to just hear more about those formative experiences and prior to a product like Tala, what were the financial options for people in the demographic you were studying? And given that limited option set, kind of what made you think there was a unique opportunity for what you were trying to build?
Sure. Well, I think the first part was in terms of studying the lives of thousands of people, what I was really trying to do is try to get an accurate picture of where their cash flow was going. So in a sense, what I was trying to understand is if we gave someone $300, where did they actually put the money in the system? Did they put it towards working capital, their kids' education, home improvements? I mean, in a sense, right now when you not really anymore, but back in the day, when you would actually give someone a microloan, in a sense, it just went into a black box because all we would understand was we gave someone $300 and then we would know how much money actually came back to us. But everything in between was kind of not apparent to us. And so we wanted to understand, is the money actually making that improvement? And so to get the data, I actually ended up literally following people around. And what I found out was actually that, again, they were both missing the capital they needed to grow their businesses, but also to actually be able to make really good proactive decisions within their financial life for their families. The options that they had were they could go to a money lender or a loan shark in their community. They could go to a family member or a friend, which would cause them a lot of embarrassment. And then if they did try to walk into a bank, either they wouldn't have the right paperwork, they had no kind of traditional credit history, but most of the times they would actually leave pretty embarrassed. And what they would say is they just felt like people were judging them or they didn't have the right clothes. And then the interesting part was when I would talk to financial institutions and actually say that these customers were really creditworthy, they would actually just openly state that these customers were not even their customers, that there was no way that they were going to serve them, and it was way too costly, way too risky. And so in a sense, they weren't even going to focus on that segment.
Mm-hmm. And what countries were you doing the research in?
So this was across West Africa, Sub-Saharan Africa, and India. So about 9 different countries in the African continent, and then also India.
So when it came time to launch Tala, how did you think about which markets you launched into initially, since you had experience across so many different markets? How did you think about those choices?
I mean, so first of all, I never thought I was going to be an entrepreneur. And so I think a lot of my decision making was a little bit naive in that sense. I mean, I had connections in East Africa due to kind of mentors and advisors and other kind of institutions that I had worked with. I also knew the customer base in West Africa and also East Africa. And so, naively ended up starting the company in 4 different countries at once. And so in Ghana, in Kenya, South Africa, and then Mali as well.
Great things have come from the naivete of entrepreneurs, obviously. So I'm curious, in the first year or two, what were some of the biggest lessons you learned along the way?
I think one of the things that has helped us a lot, and I think we learned this early on, was that we realized what some of the constraints were or problems were in traditional microfinance. One thing we realized is it's very costly to service this customer and to reach this customer. And so we knew from the beginning that we had to use technology to actually be able to, in a sense, rebuild the entire credit infrastructure in these markets. So if we couldn't actually go and physically meet the customer because that's too costly, too time intensive, then how can we replicate that human experience using technology? So I think that's a big learning lesson and something that we've kind of really stayed true to. I think another piece was, again, I think learning from the customers that the kind of financial products that they had access to were kind of blanket products. They weren't really, again, customized to the needs of their daily life. And so again, I think we think of it as our credit strategies have to be really dynamic. They have to be really flexible. And so I think that's some of the other things we've brought into it.
So talk a little bit more about the data side of the business. And you know, I'd be curious to hear also, you know, if you had any ingoing hypotheses around which data points you thought would be most useful in doing credit scoring, where perhaps there were surprises along the way about things that were more or less useful in terms of how your model is iterated over time.
The funny part, I think, is when we think about the data that's useful, you know, in traditional credit scoring, it usually ends up kind of going into 3 different buckets. The first is really, how do you identify someone? How do you know whether they're fraudulent? Then you go into, do you understand their capacity? So can they actually even repay the loan? And then the last piece is, what's the likelihood? So what's their character or their behavior? And so I think it's been interesting when we think about the data that we're collecting. I mean, it's thousands of different data points, but in some ways it can actually be really noisy. And the way to cut through that for us is actually stories and context. And so the way we think about it is all of our data points are actually interactive data points that actually make the data come to life. And so an example might be, you know, the kind of device that someone is using. If we see that someone's using a really low-end HTC device versus a Samsung device, that tells us something about their liquidity. And so I guess I think the interesting data points for us are, how can we use things like the kind of device to not just think of it as this is a high-end device or a low-end device based, you know, on those things, but it's actually saying, okay, the price of that device actually matters. And then if we interact that kind of device type with how they answer a question in the application around what the loan use case is, that might tell us what kind of business they have. It might tell us whether they're fully, you know, self-employed, fully employed, things like that. And so I don't know, I guess it's always, we have to dig deeper than just kind of creating another black box. We try to limit the number of variables that go in, and that's, I think, what makes the data really interesting.
And how much have, you know, now that you're going into new markets, different continents, how has the model needed to evolve in terms of the credit scoring?
I think the cool part is actually that, you know, we've actually developed a universal global fraud model. And I think what that tells us is that in some ways there is actually these equalizing, I think, variables amongst all of us. And most of our models are now based on behavioral data. And so in that sense, I think, you know, every time we enter a new country, the model actually becomes stronger because it's learning from all the other different countries. But then obviously, once we're in a country for a period of time, the model will evolve to actually bring in more of those cultural factors and more of the kind of capacity data or contextual data in the country. And so I think that usually comes after the fact, but I think it's pretty cool that for the first 6 months, we can actually run, you know, a model that is global.
Very cool. So let's talk about user experience for a second. I remember there was a domestic US-based financial product that I did some work with, and I remember they had, based on some user research, originally, you know, their product was able to render a credit score almost immediately for a small business, but actually they found that customers distrusted the immediacy of the result, that it actually seemed to them like, oh, this must be fishy if these results are happening in 15 seconds. So they actually added one of those sort of old school spinny wheels that makes it seem like, oh, we're thinking really hard about this, and it actually improved kind of consumer trust in the results, which you know, I thought was really interesting. So I'm sure everyone who does serious user research discovers lots of surprises. So I'm curious kind of what the user research you guys have been doing and any surprises and any tweaks to the user experience.
Yeah, it's funny. So our customers, I feel like if they saw the little spinny wheel, I think because they see it so often in their markets, we've actually tried to not show that to them ever. And so a lot of our customers will actually talk about our product as magic because money will suddenly arrive in their account in under 2 minutes. So in that, it's like been counterintuitive in that we've actually leaned into the value of speed and convenience. But I think something surprising for us is we realized, so there was this really funny thing happening, and it's kind of talking about like how our product evolves, where customers were actually overpaying their loans. And we didn't understand why you would do that. We're a lender, why would you actually pay more money than is actually owed to us? And they actually said, we trust Tala, and we, in a sense, like are trying to create friction for ourselves because they don't actually have traditional bank accounts. They don't have a savings account where they can just go and safely keep capital. And so in some ways, what they're saying is they're kind of creating their own product because it doesn't exist. And so now it's kind of giving us the lesson of like, where do we go next?
Yeah, that's really interesting. And I'm curious on the trust frontier. I think, we are in a moment where I think we see a lot of startups that are growing really fast where I think a lot of their value proposition in whatever segment they're in is just that they're great at building brand trust, that people feel like whatever product it is, they can have confidence in. And I'm curious how you thought about this trust factor, especially in a demographic that has, so often, have been taking loans from loan sharks or other things. How did you sort of convey trust as a value prop from the beginning?
So our number one value at Tala, both internally as well as externally, is radical trust. And I think in some ways we think of the first product for us as credit actually really embodies that. When we think of what credit, even in the Latin word for credit, it's like I believe, right? Comes from credo. And in that sense, like what we're really trying to show our customers is we're giving them completely unsecured credit using just mobile data and behavioral data. Our headquarters are in Santa Monica, and we're lending to folks across 5 different countries in an instant, regardless of their financial history. And so I think we really try to put that value out front and center and really saying, we believe in you, and that's actually why we're doing this, is we do not want to be the heroes of the story. We're really the enablers in that sense. And I think what's interesting about credit is it is that feedback loop of if your customer repays you, then they've actually found value in the product, they've found value in what you're providing to them, and they're completing the trust loop, which is really why we started with credit.
Well, so since you have a room full of, I assume, a lot of Columbia students or former Columbia students, I would be curious to hear what are the skills and subject matters that you learned about here at Columbia that are serving you now in your current role?
I think the thing I would say is, I studied public health and health economics, and I think for me, it really gave me the foundation for thinking about systems. And actually, that's why I started with credit and focusing on economic livelihoods, because in some ways I realized it is at the core. So even if we want to focus on things around preventative health, we really have to start from a place of how do people afford it? How can they actually, have the option to spend money on these different areas? How can they actually go better educate themselves? And so I kind of felt like this was the first building block or the foundation, and that's, I think, what it helped me the most is thinking about systems and realizing I didn't want to just create a product. I really wanted to fundamentally change the whole entire system.
So not to state the painfully obvious here, but you're a female founder, and not just a female founder, but a female founder with a product that, on the one hand, you have this unbelievable size of your total addressable market, which, for every pitch deck that has that beautiful slide that tells you how large that total addressable market is. But at the same time, it was in countries that a lot of the kind of investors that could put capital into your business probably have never traveled to. They don't have friends who live there. So anyway, a lot of challenges, stacked against you when you were initially getting out there and fundraising and telling the story. So I think it'd be great to just hear a little bit about that journey.
It was hilarious in that, if you think about it, it's not even just the fact of being a female founder. And in some ways, I think I was really lucky. I came from a background in investment banking, a very quantitative background. And so, I knew our unit economics inside and out. We had a really strong business model. But to your point, we're working in emerging markets. And then I come in with a pitch deck that talks about lending to people using mobile data, which, again, in the US, we don't even have access to credit like that, right? And so it's pretty unbelievable to say that you can do this over an Android device, sitting in Santa Santa Monica. So a lot of what I got initially was, I love Africa. And I would be like, pick a country,
right.
you know? But no, I mean, I think part of it was just, I think I put my savings into it. You know, I had to start and actually start from a place of actually having results. And so I do think that that actually helped. Is I wasn't pitching. You know, I came in and actually was just sharing my story, and investors were, I think, shocked by the fact that it was such a massive idea and that we could actually do something, you know, with our own capital. I learned how to code, you know, built the initial prototype and the algorithm. And so I think they were like, well, she's not going to stop. You know, a lot of compliments we got were, wow, we're amazed. You're kind of like a cockroach. You don't die. You know? I was like, I think that's
good
a compliment.
Advice. Yeah.
But I think part of it was just being totally relentless. And the initial team of people just worked, 24 hours a day on it.
And so you guys are based in beautiful, sunny LA, and I say this as a former LA resident who's saying this with quite a bit of jealousy. But I'm curious, you know, obviously you had this deep country experience in the markets that you were trying to serve. So, but you know, a lot of the engineering product talent in LA, that may not have been the case. So I'm just curious if you could talk a little bit about what it was like building a team in LA, and then also needing to kind of scale and work so closely with teams that are quite far away.
I think part of what we've done is really taken that approach of, I think we do believe that a lot of user research still has to happen in person. And so we have user researchers in every single market. But at the same time, what we've done is really use technology again. So we've got, I think, great tools that allow us to do digital surveys. So in the application itself, we're actually asking for feedback continuously. So at the end of every transaction, a customer can actually give us feedback right away. We are also, you know, when our customer experience agents actually talk to our customers through SMS or through the phone, we're asking for feedback there. We use things like UX Cam. We'll use Envision dashboards to do prototyping. So we're doing a lot of stuff where there's both high touch points that are in person, but then also, I would say, low touch points where we can get that continuous feedback. When we're entering a new market, we always start by doing qualitative and quantitative user research. And so the quantitative user research is, we'll actually do massive surveys where, again, going back to our roots, we're actually interviewing about 600 to 1,000 people in that country to really understand what is the demand for credit, what's the purchasing power, what are the pain points, how are they currently solving them, and then we'll go back in and do more deep dives.
And from a sort of practical perspective of, so you have how many employees in LA now? So
in LA, we're almost 120 people, but globally, we're about 515.
Awesome. And so I, you know, as someone who also spends a lot of time, I think probably on like 2 in the morning, weirdly timed Zoom calls with people many time zones away, or, you know, I'm sure some folks in the room either, you know, have distributed teams, or maybe you're all in New York, but you're working distributedly. Maybe, you know, you have a dev team somewhere else. I'm just curious, very practically, as we're seeing more and more distributed teams, kind of what you've learned, you know, the pain points, the highs, the lows.
I mean, I think the highs and maybe the things that have worked for us is we have a really strong set of founding principles. And so it kind of started from the beginning, and when I was talking about this idea of radical trust, that is our foundational value, but we have 6 founding principles that really chart the journey of the founding experience and, you know, all the twists and turns, highs and lows. And so it starts with believing in people, and our last founding principle is challenging the limits. And, you know, in that sense, like new projects, new teammates we bring on, anything, it's like we've realized that the only way to scale is giving folks something to like almost assimilate into. So we think of it as, you know, you have to make the unconscious conscious for a little bit, because people, when they join the team, are coming in with their own set of values, their own norms from their previous companies. And so it's like giving you instructions on how to cross the street, you know? So that's been a high for us, and something that's really worked as we've scaled. I think the lows are still, you know, when we have big milestones, figuring out how do we really have that kind of like global moment of being able to celebrate together. Like I remember I saw this actually. WeWork did a great job. They actually had an annual meeting where they brought, I think, like all 10,000 people into one space, summer camp. And so there's like a vision that I have. One day we'll actually be able to do that. But it's complicated because we're bringing folks from, Tanzania and Nairobi and all over the world. And so I think part of it is just kind of having, I think we do like global presentations, all hands, but I think the smaller things that we do that are like, we do peer bonuses where people across markets, every single person on our team gets $10 a month where they can actually just give each other spot bonuses. And that makes people feel more connected because it's truly about the day-to-day work and how you are acting as a teammate. And I don't know, I think those like things make up the fabric.
Totally. Yeah, I mean, one of the things I really appreciate is I think you've thought really deeply about culture and setting that really, really intentionally. And I think, probably many people in the room have had the experience in smaller startups that, there's an element of how can you be mindful about culture when like you're barely keeping the lights on and everything's kind of crazy. And then all of a sudden you need to sort of formalize and codify these things as you scale. So I'm wondering if you just talk a little bit about how culture has changed and how it gets codified.
Yeah, I think we think of culture internally at Tala as what we're building is a community. So we're building that both externally with our customers and for them. At the same time, internally, we think of it as we ourselves are a community. And when we think about community, I think the number one thing we think about is belonging. And I guess, I mean, there are our founding principles, there's our values and how we behave against those, but I think the other part of community for us and belonging is really, I think, a lot of the work we've done around diversity and equity. And I think part of that is realizing that diversity is, sure, bring in people that have those diverse backgrounds, but it's only if you can create an equitable environment where people can actually thrive, where they can actually have an equitable place for them to really fulfill their potential, is what we've learned actually creates that belonging and that sense of community.
One thing that I meant to ask you before when we were talking about the UN, I think we both of us and my partner, many people in our lives have formerly or currently worked for various INGOs and development institutions and are now building for-profit business models, in your case, a venture-backed one. And so I'm curious, I think that there are many people who could have done similar user research to what you did and come up with a wide range of solutions ranging from there should be a government intervention, it should be, a nonprofit credit facility, and obviously now you're building this really amazing venture-backed business with quite a bit of scale to it. So I'm just curious, just to shoot back a little bit, how you thought about, after seeing everything that you had seen, like what the range of options were and how you decided that kind of going with a venture scale business was what made sense with the challenge.
I don't know. I mean, there's part of me that like thinks back to it, and I go back to, I did not think I was going to be an entrepreneur. I saw the problem, and I think I started it just like thinking manually, right? In some ways, I actually just unconsciously started lending to these customers myself. And then I think part of it was stepping back, and as I was actually talking, I talked to like 1,500 people on LinkedIn or reached out to them. 30% of them got back to me. But I think part of it was, people asking me the questions of, why are you lending to these people? What is it that's like telling you, that this is the right credit risk or not right credit risk, and kind of putting together those pieces and realizing, oh, well, I'm actually underwriting these people using their daily life data. And so what that led me to then saying, okay, how do I actually find scalable daily life data? And then that led me to realizing, oh, a lot of this information is actually on our phones. And when you get paid in a market like Kenya or India or Mexico, you actually get a text message. Or when you buy a bus ticket or you pay your cell phone bill, all of these little messages or confirmed receipts are actually in the form of an SMS sitting on your phone. And I was like, maybe I can find a way to seamlessly bring that in. And so learning more about Android and learning about the operating system. And then from there, it just continued and continued. And so I think that's kind of the fun part about, I think, being naive, but also finding a problem that you cannot stop thinking about, is that you have no fear, because you're kind of like, this problem is so enormous. Even if we actually just make a little bit of a dent, it's making a big difference.
By the way, I'm curious, in your not so ample spare time, this question of like, what are the problems that absolutely keep you up at night, that you'd be thinking about, for free, because it's, it is captivating to you. But I'm curious, obviously you need to have some downtime, and I'm curious, just like as a founder and CEO who is growing a business at such a clip, what is your life like outside of work? Like, do you find balance? If so, what does it look like? Is it a work in progress?
No, I do. I mean, I'm married and I have a dog that I love. Yeah. I think that I think I find balance. I am one of those people that probably in some ways needs that outlet as well. That's also a challenging outlet. So whether it's picking up like a new workout routine or finding new things to eat or travel, or I think just exploring in different ways actually helps me be, I think, probably better in this particular thing, because it can be all consuming. I don't know, but the other thing I think is interesting is so many other problems kind of, I think, are related to this work. And so whether I think, like, I joined the Santa Monica Tech Council recently, where, I'm diving into workplace issues in Santa Monica or Los Angeles, or diving into homelessness there. And it actually makes you realize, like, how can you use some of those solutions back into this work too.
By the way, that was a little bit of a trick question. Having known Shivani for a little while, she would routinely force me to go to workout classes where she'd be like lifting weights larger than herself while I was sort of panting, lying on the floor, which is part, why she's obviously such a badass CEO. I know that I only have one more moment, so just to wrap, I think probably we'd all like to hear, what is something you have on the horizon in Tala Universe that you are really excited about?
So I think I already hinted at a little bit of it, in that, by looking at how our customers are using our product, or the feedback that they're giving us, we are starting to move beyond credit, and we are starting to realize that this relationship that we've developed with them can translate into other products and services, and realizing, like, really what we've done. I mean, we have over 7 million people that are using this product, and that have, in a sense, trusted us with their financial lives. We're realizing it isn't just a credit product. It is really an account of some sort that we are giving to them. And so how does that account really come to life? I think something that I'm really excited about and really excited to see us go into is focusing not just on the products and services, but also thinking a lot about mindset. And when we think about our customers and the underserved globally, they are facing a lot of anxiety, and that is what comes with having very volatile cash flows, not necessarily knowing what's going to happen to your business. And so what we're really focused on is how can we actually be there for them and somehow put them in a place that is more proactive in their financial decision making instead of being reactive. And based on just the initial kind of baseline studies that we're doing, we're actually seeing that if we can give them that sense of security, that actually gives them the financial confidence to actually make some of those better decisions within their business and how they care for their families. And so that's a whole other set of stuff we're excited about.
Well, thank you. To be continued. I'm going to exit stage left.